In the last video, we checked out the threshold limit based on which a person is liable to register or he's exempt. It's now time to get into the third and the last category of people who are liable to register. So the persons under this category, under the category of mandatory registration, are liable to register whether they exceed the threshold limit or not. So this is an overpowering condition. No threshold limit. If you fall under any of the categories under mandatory registration, you should go ahead and obtain a registration. So what are the subcategories under mandatory registration? There's interstate supply, e-commerce operators who are paying tax on specified services, person supplying through e-commerce operators, person required to deduct tax, casual taxable person, e-commerce operator collecting tax, online information and database access, reverse charge, non-resident taxable person, e-commerce operator, person supplying on behalf of others, and a few more. It's a long list. Confused? Overwhelmed? Hey, don't worry. Even though it is a very long list of compulsory registrations, mandatory registrations, what we've done is we've tried to find out some common thread amongst these and found out 3 broad categories under which all of the 13 persons liable to register can be classified. We've done this just to simplify recognizing and remembering all of these subcategories. Remember that the law does not specify any of these 3 categories. It is our own concept to simplify the topic. So what are these 3 categories? The first one, you can easily guess, is nothing but e-commerce related. Persons who are related to the e-commerce industry, either as operator or as supplier who supplies through an e-commerce operator. The second category is of remit tax or claim input tax credit. If a person is required to pay tax to the government or he wants to claim input tax credit, then he'll have to be registered. The third is a special category which includes special persons or supplies. So these are the 3 broad categories. Now let's classify our 13 subcategories into these. You have 4 persons under e-commerce related, 4 under remit tax or claim ITC, and the remaining 5 under special cases. We'll check each of these one by one. In the remaining of this video, we are going to concentrate on the first category of e-commerce related. So you have the first 2 persons under this. Person supplying through an e-commerce operator who is required to collect tax and an e-commerce operator who is collecting tax. So we will take these 2 together because they are 2 parties across a same supply chain thread, supplier and e-commerce operator. So you have a supplier who is any person who sells any goods and or services via an e-commerce operator, and you have an e-commerce operator who is required to collect tax. Let's try and understand the situation, the provisions here. So you have a supplier, he puts his goods on this e-commerce operator's website, and the customers who visit this website would buy the goods from the e-commerce operator. So you have 3 parties: supplier, e-commerce operator and customer. So the flow of goods would be supplier would supply goods to e-commerce operator who will in turn supply it to the customer. Something like that. So now the e-commerce operator will collect the value of supplies and the taxes from the customer. So the customer pays these things. Now what the e-commerce operator is required to do is that of this amount collected from the customer, it will have to deduct 1%. That's the percentage fixed as of now. It can change. 1% of the net taxable supply value, and only the remaining it will pay back to the supplier for the sales. So basically how it works is, across a period, the e-commerce operator will have to pay the sales receipt to the supplier. From this sales receipt, which is the net value of taxable supplies, the operator has to deduct 1% and then pay the remaining back to the supplier. Now, there's this logic involved. E-commerce operator is collecting tax, and so he is required to be registered. Any person who's collecting tax has to be registered so that our government can track the collection of tax. The second logic, why is the supplier supposed to be registered? In this situation, the e-commerce operator is giving back the tax collected as well to the supplier. So the supplier is actually liable to pay tax to the government on these supplies. E-commerce operator is taking only 1% of the total. The tax rate could be 15%, 18%, anything. So the remaining tax, the supplier will have to pay to the government. So in this situation, what happens is that the supplier can claim input tax credit on the amount collected by the e-commerce operator. And that's why the supplier will also have to be registered, because any person who claims input tax credit will have to be registered. That was the first condition attached to input tax credit, which we checked out in the previous section. Moving on to the third person under e-commerce operator. This is an e-commerce operator who's paying tax on specified services. So we are talking about a very specific category of e-commerce operator and not a general category like the first one. So in the first category, the e-commerce operator collects only a portion from the net taxable value of supplies and pays the remaining off to the supplier, including the taxes, and the supplier is liable to pay tax to the government. The special e-commerce operator category is where the supplier is supplying to the e-commerce operator a special category of services, specified services, and the customer is paying to the e-commerce operator the value of services and the taxes. Here's the difference. The e-commerce operator is liable to pay tax to the government and not the supplier. The operator will collect taxes from the customer, and unlike the first situation, it will not pay these taxes back to the supplier. It will have to remit it to the government. So the provisions are that the state or central government will specify categories of certain specific services, and the e-commerce operator will have to pay tax for these services supplied through it to the final consumer, as if he's the person who's actually liable to pay tax. It would be easier to understand this category if you imagine that there is no supplier involved, that the e-commerce operator himself is the supplier. He's selling the goods to the final consumer and he's liable to pay tax. Business as usual. And that was the third person under e-commerce related category. The difference is that he has to pay all of the tax to the government, whereas in the first case, the e-commerce operator collected only a portion of the net taxable value, 1%, which is the current rate, and gave off all of the tax collected to the supplier, who was finally liable to pay tax. The supplier can claim input tax credit, and so he also has to register. In both the cases, the e-commerce operator is collecting tax from the customer and it's finally remitting to the government. In this situation, they are supposed to be registered, and that's why mandatory registration irrespective of threshold. We all live in the e-commerce world where we purchase and sell goods online. The sheer volume of such transactions through e-commerce portals are really huge. So the government needs to keep track of such a vast volume of purchases and sales. So what it finally decided was that it would mandate all e-commerce operators, irrespective of threshold, to register. And that's the fourth category under e-commerce related, all e-commerce operators. So you need to remember only 2 points under this. All e-commerce operators are mandatorily required to register, and a person, the supplier who supplies through an e-commerce operator who is required to collect tax, it is mandatory for him to register in order to claim input tax credit. So those were the 4 subcategories under e-commerce related. In the next video, we'll check out the next category of remit tax or claim ITC, which again has four subcategories of persons.